Hello, this is Japanese Economic Review Channel. Today, we'll explore Japan's macroeconomic landscape using the FY Reiwa 7 trade statistics from the Ministry of Finance. We will uncover how Japan's earning power and global supply chains are experiencing profound structural shifts beyond the surface numbers. The standout news is the dramatic 67.8% reduction in Japan's trade deficit, down to 1.74 trillion JPY. This was driven by a 3.9% rise in exports against flat imports. Crucially, tech exports like electrical machinery grew by 7.2%, offsetting a 3.0% decline in transport equipment, while a 14.0% drop in mineral fuel costs provided massive import relief. Looking at the waterfall chart, the deficit shrank thanks to a 4.2 trillion yen export expansion, anchored by a 13.3% global surge in IC exports. Conversely, mineral fuel imports dropped by 14.0%. This shows our deficit reduction is heavily reliant on the external factor of cooling global energy prices, alongside strong semiconductor performance. Japan is rotating away from its traditional reliance on finished vehicles toward foundational tech components. Transport equipment contracted by 3.0%, heavily dragged down by a 15.9% drop in U.S. auto exports. Meanwhile, electrical machinery emerged as the new growth engine, driven by a 5.2 trillion JPY surge in ICs. Despite flat import growth, the internal structure shifted. Mineral fuels remain our largest import at 21.5 trillion JPY, but costs dropped significantly. For instance, coal plunged 23.3%. While physical energy volumes remained stable, cooling global prices artificially shrank our trade deficit, masking our structural vulnerability to energy markets. Our global footprint reveals distinct geopolitical roles. We run a $6.99 trillion surplus with the US and a $4.80 trillion surplus across Asia. However, these gains are entirely consumed by a massive $6.58 trillion structural resource deficit with the Middle East and an $8.23 trillion manufacturing deficit with China. Contrasting the US and China reveals our dual economic models. With the US, we boast a surplus driven by 5.2 trillion JPY in auto exports, though this is flashing warning signs due to collapsing demand. With China, we are the factory floor, running a massive deficit by importing 3.5 trillion JPY in communication devices, but integrating via our high-tech IC exports. Our 4.8 trillion JPY surplus with Asia masks a deeper symbiosis. Japan supplies the critical brain power, exporting 13.3 trillion JPY in electrical machinery, including ICs, which grew 13.9% year over year. Asia assembles these into finished electronics, which Japan ultimately repurchases. We are the upstream anchor of the Asian tech ecosystem. Our trade with the EU shows a unique exchange. While we export 2.8 trillion JEP in transport equipment, we run a 2.4 trillion JEP deficit. The key driver is the pharma anchor. We import an astonishing 2.6 trillion JEP in medical products from the EU, dwarfing our pharma exports, alongside an ironic 1.1 trillion JEP in European vehicle imports. The Middle East represents our greatest vulnerability. We run a 6.58 trillion JPY deficit here. A staggering 93.8% of all imports from the region are mineral fuels, totaling 10.4 trillion JPY. While this deficit shrank by 21.9% this year, it was entirely due to global price drops, not a structural shift. We remain completely captive to Middle Eastern energy. An unexpected anomaly appears in our Russia trade. Despite global sanctions, Japanese exports to Russia grew by 13.7% to 382 billion JPY. The primary driver is transport equipment, which makes up 66.2% of all exports there. Specifically, exports of passenger motor vehicles surged by 15.5%, likely driven by the secondary car market exploiting sanction loopholes. To conclude, Reiwa 7 reveals Japan's three identities. First, the expanding high-tech supplier, deeply embedded in Asia's computing chain. Second, the contracting consumer exporter, facing severe headwinds in Western auto markets. Third, the captive buyer, reliant on static energy dependencies. Our pivot to tech currently masks the auto decline, subsidized by temporary energy cooling. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.